With the financial collapse looming, many individuals are concerned about their hard-earned savings. So today we will answer the question I get often: are credit unions safer than banks? I'm going to show you this, tell you the easy explanation, get the diagrams to support all of this, and connect it all together. You came here for the truth, so let me unveil that for you. Let's begin with this right here. This is by no means a very detailed analysis of the differences, but we're just going to highlight a few points and break it down for you in the easiest possible terms. So let's go into this here. The left-hand side is credit unions, the right-hand side is banks, and I just want to note a few points from this. At the credit unions, depositors are called members. Each member is an owner of the credit union. This is really different from the banks, where the depositors are called customers. Customers have no ownership interest in the institution. And the highlighted portion, banks are owned by investors who may or may not be depositors. So let's flip back into the pages of history as we see the differences really forming today. Typically, you'd have your wealth, which was, let's say, gold coins. You would take that to the bank. The bank would hold onto that for you, and they would issue you a note. That note was a promise to pay you back your wealth, and they would, of course, give you that back, and everything would be just fine. Well, today, we know how different it all is. Since the credit union members are owners, each member, regardless of how much money they have on deposit, has one vote in electing board members. Members can also run for the election of the board. This differs from the banks, which are owned and controlled by stockholders whose number of votes depend on the number of shares owned. Customers don't have voting rights, and it goes on and on. Essentially what we have is, and this is an overgeneralization, banks are run for profit, but the credit unions are there more so to hold on to your hard-earned dollars. Now, there is much more to that, but stay with me for a moment. We're going to look at this here. This is my oversimplified diagram that I drew up for this video, and there are many more we'll get into in a moment. But essentially what I'm trying to show you here is that the credit union is surrounded and made up by the individuals who are essentially dealing with them. So you have a very different scenario from the mega bank, who sits on top of you and you are alone. That's the difference here. The credit union made up of the people, the mega bank made up of a whole bunch of stockholders, and you simply give your hard-earned dollars to them. Well, there are differences here, but there are also similarities. I want to get to this first and discuss very briefly how the monetary system works. At the top of the food chain, you have the central bank. In this case here, this happens to be a diagram from the Money GPS. You have the Fed. So the Fed is essentially the printing press. They only have two things they can do, and one is the printing press, and the other one is a manipulation of the interest rates. Now, they print off that money. They give it to the commercial banks. That's the big banks. They give that off to the commercial banks. The commercial banks then loan that out to the individuals. This is, again, an oversimplified version, but that's how the monetary system works. Central bank, commercial banks, and little old you at the bottom. This presents a big problem, though. We have this. I hope you can see that little tiny triangle at the very bottom. That's real assets. It's a very small font compared to everything above that. But this is essentially what we have in the monetary system. This is the reverse pyramid, which happens to be the symbol of my book, where we have real assets supporting everything on top of that. Directly on top of the real assets is the fractional reserve banking. I'd like to just talk about this for a moment. Fractional reserve banking is a method that they realized how great this would be to implement. Essentially, you give the bank $1, they can then loan out $10. They realized, look, not everybody takes out their money all at once. Why don't we only keep a fraction of that on hand? And then we could loan out so much more money. When everything is all good in the economy, they say, you know what? You can loan out $10 for every dollar you have. Then when things get bad, when things get scary, they could do one of two things. They could say, all right, we're going to tighten up a little bit. Instead of $10, you can only loan out $9. Or sometimes they try to take risks, and they often do this. You can see this in China right now. This is happening as of 2015, where they start to relax these rules. Let's move on here to, on top of the fractional reserve banking, you have derivatives, and derivatives are essentially completely fictional. Derivatives are products that are created sometimes out of thin air, sometimes out of this tiny little sliver of real assets that sits way, way below, and they basically create this out of nothing. Sometimes they bet on the weather, sometimes they bet on things that simply have no value. I've done other videos about this in the Money GPS e-course, so I hope you check that out. I'm going to move on to this right here. Why exactly is this whole credit union a risk? It seems safer to me. All of the things that I've discussed here today seems like it is a better option. Well, that may be the case. I'll leave that up to you. But what is very important to note is this. Here we have an example of the ultimate hyperinflationary scenario. The Reserve Bank of Zimbabwe's $100 trillion bill. What we have is a problem with the currency itself. Currencies are devalued by the central bank. You have the central bank at the top, as I showed you. Then you have the commercial banks. By the time it makes it to you, through all of these other wealthy elite hands, makes it down to you, down to the totem pole where you and I sit, it's devalued. This is just one example of how bad things can get. Central bankers devalue the currency every single chance they get. They use interest rates at 0% intentionally to devalue the currency. They implement strategies like the QE, like the bailouts, and like everything else that basically funnels money from your hands into the elite hands. So why is this important to note? Well, as far as I'm concerned, as far as the Money GPS strategy is concerned, you want to have your money in real assets. Don't keep savings in the bank. Yes, you need money to pay your daily expenses. I completely understand. You have bills to pay. You have things you need to buy. But it doesn't make sense to keep your savings in the banking system. It is a risk. And in fact, in a way, it's a guaranteed loss. You can see this historically in virtually every currency around the world has lost value against real goods. This is measurable. This is definitive. And I hope that you will understand how serious this really all is. So what I would say to individuals is to look deeper into the credit unions and see if it makes sense for you and what you do. Perhaps some diversification, some money in the big banks if you need to, as I know they do deal well with individuals, perhaps for offshore payments. If you deal with different countries and so on and so forth, it may be easier to transact. There are certain, real strategies that you can use to make your life easier. But again, do not put all of your eggs into one basket in this case. If you want to do more research on the credit unions, you can do so by heading over to a start page or whatever search engine that you use. Type in credit union and the name of your city. That would be a good place to start. You can see other people who are talking about it, see what's available to you, see the options, and look into it deeper. I hope that you found this video informative. If you did, please give me a thumbs up. This is something that I consistently am being asked, so I decided to record a quick video about it. Hope you found it interesting. If you found this video informative, I know you'll find my book, The Money GPS, even more informative. You can actually flip through the book. If you go over to Amazon, they have this look inside feature, which allows you to flip through the book and see if you like it for yourself. Take care.